Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 17th of December, comes to you from London. And we're seeing energy markets in Europe being hit this morning, so we'll come back and have a look at that at the end. First of all, we take a look at the dollar. And we're seeing quite a lot of red on the screen this morning as well. UK interest rates went up yesterday, of course, and inflationary fears and Omicron variant fears still hanging over the market. So we're seeing the dollar just weakening slightly after the Fed's comments. Very much a sell the news, buy the rumor, sell the news. The expectation that interest rates would go up was confirmed by the Fed, and we've seen a market reaction in the other direction from that you would expect over the last couple of days. But the fact is the dollar is on medium and long-term trends. It's the weekly, daily and 60-minute charts, long-term, medium-term and short-term view of the market. We're bullish above the cloud, we're bearish below. It's that simple. That means the euro has gained a little bit of strength in the last 24 hours, but the reality is we are falling through the cloud on these long-term trends. We expect a bad year ahead for the euro. Sterling jumped back above the 133 level. The Bank of England decision was a little bit of a surprise. Most people thought they would hold off until February, but the market has reacted positively, of course, to that short-term news. But the reality is medium-term sterling is in decline against the dollar. Against the euro, we actually pulled back a little bit. We're at 117.50, but again, the trend is generally up against the euro. Sterling just looking slightly stronger. Bitcoin sitting steady at $47,000, just can't get back above that $50,000 mark, which means that it is medium term bearish below the cloud, same as short term. So we are just seeing cryptocurrencies falling back towards these downside targets, but we still have the target to 83,000 in train. We'd need to fall below that low that we saw in the summer in order for that target to come off the chart. Taking a look at the S&P 500 index, we fell away just under 1% yesterday. This 4,700 level is looking like a bit of a resistance area, and 4,500 support. So we've got to watch for those levels, really. The NASDAQ was also fell away at the end yesterday. So we see that big daily candle down. It's almost like a little bit of a bearish engulfing candle there on the day. And that means that the futures are looking to open slightly lower again today, down about 0.25%. The VIX volatility back above 20. So the market's seeing a little bit more risk coming back in the fear index. We're seeing Germany down 0.6% this morning on the DAX, and the CAC Quarante down 0.5%. So European markets falling away, and Asia was pretty well down everywhere, bar Australia up slightly, but Oz had fallen, in fact, the day before, and so that's quite key. We're seeing Hong Kong's woes with Chinese property shares just continuing to dominate, a weekly engulfing candle there. So we're just seeing more and more bearishness creeping into Asian markets. We'll look at the energy mix in a minute. Wheat is actually up, so that's looking stronger this morning. Still got those long-term upside targets. Gold is finally back above the $1,800 level, pushing higher. Markets becoming a bit fearful. Dollar falling away a little bit has helped. But gold is starting to move back above this critical $1,800 mark, so that's good news for gold bulls. And silver is up similarly as well. And palladium, which has had a terrible time of it lately, up 2% of back above the cloud on the short term. But boy, oh boy, those charts are still looking pretty bearish in the long medium term. But gold is looking better. That's the big one today. Looking at US 10-year yields sitting at 1.42%, so falling away there. Interest rate expectations, even though the Fed's talked about it, the market is not really taking that in its stride, and very much seeing lower bond yields there. That's good news for the bond market, of course. If we look at the energy mix, we've got Brent Crude lower 1.4% this morning, so we are moving back below the cloud. The same with WTI. Again, we're moving lower there. US nat gas was a clear-cut one this morning. We called that lower. And so we're breaking that 370 level, and we've got downside targets pretty clear there. Coal sitting steady at 128, into pretty bullish territory. We're only really bearish on coal below 100. Emissions are down 2.4% this morning. We've got a real seesaw going on here, and we have got some downside targets. We called that today as well for clients. Looking at nat gas, that's where we're seeing some big moves. TTF this morning is lower, and the same with MBP. And again, we put a call out for clients, so that's quite key as well. And German power was down first thing, has managed to recover, so looking interesting there. We'll have to keep an eye on those targets. Watch your OTC targets today there. That's it for today. Until Monday, have a great weekend. Happy charting. See you then.